Hi everyone, welcome back to the channel. I am Marc Asset, and in my last video we talked about where the Bitcoin price could go next and the potential upside many analysts are predicting over the next few years. But today I want to go a little deeper because to really understand why Bitcoin has such massive potential, you need to understand what makes it valuable in the first place. And that brings us to today's topic, why Bitcoin is called the digital gold. We are going to break it down in simple terms, how Bitcoin is similar to gold, how it's actually different, and why so many people believe it could eventually replace gold as the world's top store of value. Okay, why people compare Bitcoin and gold? For thousands of years, gold has been trusted as money. It's rare, it's difficult to mine, and it cannot be printed by any governments. And that's exactly what makes Bitcoin so powerful. It takes those same principles, but brings them into the digital age. Just like gold, Bitcoin is scarce. There will only be 21 million Bitcoins in existence. That's it. The code literally prevents anyone from creating any more Bitcoin. And just like gold, Bitcoin has to be mined, but instead of digging through rock, miners use computers to solve mathematical puzzles and they get rewarded with new Bitcoin. But here's where it gets interesting. Every 4 years, that reward gets cut in half. That's called the Bitcoin halving. And it means fewer new coins entered in circulation over time. So, the longer Bitcoin exists, the scarcer it becomes. Okay, scarcity, supply, and demand. Let's talk now about simple economics. When something is hard to produce and the supply is limited, the demand is increasing and the price goes up, okay? That's exactly what's been happening with Bitcoin. Every halving reduces the new supply, and historically, that's when major bull markets begin. 2012, 2016, 2020, each one followed the same pattern. So when people call Bitcoin digital gold, they are really talking about this supply and demand dynamic. Bitcoin is programmed scarcity. It's math-based scarcity. No central bank can print more of it, okay? And no politicians can change the rules. Now, the qualities that make it digital gold. Gold became money because it had special properties. It was durable, divisible, portable, and scarce. Bitcoin has all those same qualities and improves on many of them. Durable. You cannot destroy Bitcoin or counterfeit it. It exists on a decentralized blockchain that's verified by thousands of computers around the world. Divisible. 1 Bitcoin equals 100 million Satoshis, so you can spend tiny fraction of it, unlike gold, which you'd have to melt or cut. Portable. You can send Bitcoin anywhere in seconds. Try doing that with gold bar, okay? I don't think it's possible. Verifiable. You don't need to test it with acid or any other kind of machine. Every transaction is cryptographically proven. It's like gold, but smarter, faster, and global. Okay, Bitcoin versus fiat money. Now, let's compare Bitcoin not just with gold, but with traditional currencies, dollars, euros, yen, for example. Central banks can print as much of those as they want. In fact, since 2020, trillions of new dollars have been created out of nothing, just thin air, okay? The results? Big inflation. Prices goes up, your savings lose value, and the money in your pocket buys less every year. Bitcoin is designed to be the exact opposite. It's deflationary. As time goes on, fewer new Bitcoins are created, while more people want it. That's why people use Bitcoin as a hedge against inflation, just like they used to do with gold. It's value that cannot be diluted by political decision. And this is huge. Now, institutional adoption. Here's where things get exciting. 10 years ago, Bitcoin was dismissed as a scam or a toy for tech nerds. Today, it's held by major corporations, hedge funds, and even countries. Tesla owns Bitcoin. MicroStrategy holds more than 200,000 Bitcoin. El Salvador made it legal, tender, and even issues Bitcoin bonds. We now have Bitcoin ETFs trading on Wall Street, and institutional investors are allocating billions into the space. That's not a fad, that's mainstream adoption. Every time a new institution adds Bitcoin to its balance sheets, it strengthens its reputation as a digital gold, a modern store of value that the world can agree on. The challenges now. Of course, Bitcoin isn't perfect. It's still volatile. Prices can swing 10% in a day. The government are still figuring out how to regulate it. And there is human factor. If you lose your private keys, your Bitcoin is gone forever. So yes, it requires responsibility, but so does owning gold, okay? You wouldn't bury gold in your backyard and forget where you put it, okay? The same principle applies here with Bitcoin. So now the huge question, will Bitcoin replace gold? Some experts believe it will because it's easier to store, easier to transfer, and easier to verify. Younger generations who live in a digital world already see Bitcoin as superior, okay? But gold still has a 5,000-year head start. It's trusted, it's tangible, and is universally recognized. So rather than one replacing the other, they might coexist, okay? Gold could remain the physical store of value and Bitcoin the digital one. Together, they balance the old world and the new world of money. So, the future of digital gold. The more time passes, the more Bitcoin proves its resilience, okay? Every market crash, every regulation attempt, every headline calling it dead, it just keeps coming back stronger, okay? That's because Bitcoin isn't just a currency, it's an idea. It's a centralized, borderless form of money that belongs to people, to the people. Gold protected wealth for centuries. Bitcoin might protect it for the next century. And that's why for so many people, Bitcoin truly is already digital gold. So what do you think, guys? Do you believe Bitcoin will eventually replace gold? Or do you think they'll both continue to exist side by side? Let me know your thoughts down in the comments. And if you enjoyed this video, hit the like, subscribe, and turn on the notification bell so you don't miss the next one, where I will explain exactly how Bitcoin halving could impact prices in the next years. Thanks for watching, guys. I'm Marc Asset, your favorite Italian investor, and I'll see you in the next video. Ciao.